to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Tuesday, July 31st, 2012. Well, a change of trend today and a candle with a higher high and a higher low. Previous day's trading we had a change of trend to the downside. We saw the market find support down around the Tenkan-sen, and we know the Ichimoku indicators connect to support or resistance. Prior to that we saw the Kijun-sen hold as resistance for this market, and then we have a market that's trading between both of these indicators and finding support and resistance between the Kijun-sen and the Tenkan-sen. Today, however, that change of trend has occurred with a white-bodied candle. The white body denotes the buyers making net bullish progress, but we did see the buyers lose some commitment at this important 123.28 level of resistance. That's a very important level. We can see that it was tested on 1, 2, 3, 4, 5, 6 and 7 occasions now, and we've seen the market rejected from there. So if we are going to see this market trade higher, a close above there will be important, and a bullish close if we are going to see the market test to higher levels. In terms of the Fibonacci extension, now that the market is trending up, we're examining the relationship of the prior first time frame uptrend to the current first time frame uptrend. And here we see the market rejected from the 23.6% area, and that could be important. Even though the 23.6 is a minor level, we have seen some strong rejection, even though the buyers have closed with control of this market. So for tomorrow that will be quite important. Some other areas we should be watching if the market does appreciate is around the 38.2% at 123.57, and then extending up to the 50%. The 38.2% coincides roughly with where the Kijun-sen is trading at around 123.66, so that will be a very, very strong level up around there. And now just looking at the Fibonacci retracement of the prior downtrend. Now the prior downtrend was only for 2 candles, and then we had the change of trend today, so not a long history to take into account, but just looking at the relationship here, and here we've seen strong rejection from the 61.8% and the 50%, so there is a possibility that this area could hold, and we could see a change of trend back to the downside. So the area around the low of this current candle becomes important. In terms of Ichimoku, obviously the market is bearish in the long-term time frame by trading below the cloud, and also bearish in the medium-term time frame by trading below the Kijun-sen, the pink line here, but maintains its bullish bias in the short-term time frame by trading above the Tenkan-sen. And we had the solid bullish breakout up above a few days ago, and the market is now finding support at the Tenkan-sen, so there is a possibility we could see this market continue to rally. But as I've mentioned already, we have the market trading between these 2 indicators, and they're holding as an area of support and resistance, so we do need to watch those levels very, very closely. In terms of resistance, I've already mentioned this 123.28 level, so that will be important for the market moving forward if we are going to see the market continue to appreciate. But also the area around the Kijun-sen at 123.66 will be important resistance, and it's turned flat, and very often the price action is attracted back towards a flat Kijun-sen, and that's what we've seen for today's trading. But the influence of the 123.28 area has really been much stronger than the flat Kijun-sen. So let's watch how the market reacts to these levels. We're likely to get a market that's travelling sideways for a while. If we do see a sell-off and the Tenkan-sen fails to hold, then 121.55 is pretty important to this market. We could easily be trading down there in a couple of days, but let's watch these areas of support and resistance that are close by first.